Hey everybody, welcome to the fresh day of the fresh week, which is going to be a fully committed week for the Indian markets. Of course, a total week is going to have an important trading sessions, which is going to face the volatility in a heightened manner, which is going to decide the clarity and the trend of the markets in the upcoming sessions for the entire April even. Since the face of our markets, based on the behavioral analysis, it has changed, particularly in the month of March. So this is the first time the April month after phase changes on the market's trend and particularly behavior side, which is going to face or which is going to experience the new kind of pathway or the roadmap for the NIFTY and Sensex. So that would be deciding based on this particular week's trend, which is having a fullest engaging week starting from the 6th of April 2026. Based on the previous month and the mixture of final days in the March and beginning days in the April for the ended week recently, the markets could not sustain above any immediate support levels consecutively. It has closed sixth straight week with a loss on weekly basis. Which means what? It should decide for any recovery or rebounding activity within this week. Otherwise, the next week also can be expected on the same trend where it is going to end the current trend. Please make a mark on it, note of it. How the markets are going to close this week will be dictating the next 1 or 2 weeks trend on the weekly basis. Week on week close, you can compare. Based on the behavior analysis, we have done the deeper research as well as the outcomes what we are providing will be helping you all to understand clearly about the roadmap the Indian markets are having to move on. So that's the reason we are telling this week is going to be an entirely important week for our markets. Based on the geopolitical concerns and tensions which are being dynamically changing and escalating as well, which have totally given an eradicated volatility as well as much of difficulties in approaching the trading of stocks or index, whatever may be. Every day is a new day and every day has a gap down or a gap up open. So probability were being seen for every one gap up, the three times of gap down witnessed on the markets based on the month of March and till the end of the recent week's behavior, which is going to continue also based on our perception and expectation. So until the markets clearly moving beyond the level of, in terms of Nifty's value, 23,740 or as a whole, 23,700 we can say. The chances for cutting below the level of 22,000 also can be expected. With every rise is seen attracting selling are getting capped immediately around 22,700, 22,900, 23,000 as a psychological, not a technical based one, but technically 23,100. These are all the core immediate resistance points that were layered till now, which can easily resist the bounces if any happen. That's why we are advising you all to follow the sell on rise strategy with a constructive manner, not in a single sort of trading behavior is advised or trading practices on your individual side. We are advising, because if you are a single sort of trader or a investor means this is not the market, because the volatility and the band of the Nifty's range or Sensex or any other sectoral index, if you take, the band became very wide and very volatile. Which means what? If you desire to do the intraday trades, when compared to the previous range, the band now become at least 2 or 3 times wider. There you cannot see the same kind of stop loss or target be fixed by using or by trading within this wider band. Because of that, bands are expected to continue to be in a wider way or even extending further. It would be prudent for the risk appetite trader only can participate on the day trading activities or the trading like short term, 2 days, 3 days, 5 days, and all. Who all wish to want to play a safe trade, kindly make a note that this is not the market to approach for you kind of safe trader or a small capital orient having traders, where you can keep the cash sideline protecting your capital. It would be better to observe the market until it is getting settled in terms of volatility and getting direction with conviction. This much of things and all should be needed and proved by the market's behavior. Then you can see or experience by entering into the trades, whether it is long or short. This is what the core underlining point to be discussed for the safe and small traders. So the day will be opening with a marginally lower trend or points. Maybe after open, the trend may get further confirmation through the way of breaking down any important level, particularly the Friday, that means Thursday's one. The last trading session was happened on Thursday for the ended week. That was happened around 22,182. That should be held, but the conviction is not there to hold that particular level. If that particular 22,180 getting broken means, you can see the chance for making 21,800 will be rising on the cards. That may not be happening today, but within this week, possibilities are very high. If the 22,182 gets broken, if it sustains below that level for the day, any day going forward, that is far enough to get the confirmation that the 21,800 can be easily breached out by the market or NIFTY. On the higher side, as described earlier, every 100 points are resisting the up move. So that may be a chance for building shorts freshly or reducing your existing long positions, even by the way of approaching 22,700, 22,800, 22,900, 23,000 as a psychological one, not the technical one, 23,100 till you can utilize every this 100 point of upside levels as a resistance zone to build the shorts. From the positional perspective also, until otherwise, it is closing above the point of 23,740 with consecutive 2 sessions of close. Every bounce may be expected to attract selling. The range have become very wider. So until it is giving the upside of confirmation above the 23,740, between 22,000 and 23,000, the maximum chances are there for oscillating or swinging on the Nifty side, where every supports can be utilized. For the short-term traders only, it may be suitable with the positional perspective, which can be that the support levels may be approached in the way of building long and near to the or in advance to the resistance point we have discussed here can be utilized to reduce the positions by the way of booking profits. On the sector front, because of the increased tensions across the Middle East and West Asia between particularly US, Israel and Iran, and the recent one started giving threat or being like a headache for India, like that Pakistan's threatening message, that may be also adding some pressure geologically and make everyone, every citizen, till every trader and investor in the markets to be vigil. Then only it can be a promptive one to approach the market. For that, the no reaction immediately we are seeing on the market. But anyhow, this is a door opener for the next kind of downward leg of rally with a huge volatility without giving any cool off kind of activities. That can be also focused. So the banking and finance will be taking the highest participation on the either side of direction, whether it is the continued downtrend or any rebound based one. That should be those two sector or sector oriented stocks can be highly focused. After that, the oil and gas and energy based on the current situation across the geopolitical. And metal can be specifically focused, particularly from the aluminum, steel, than mining oriented. The metal, as we always termed it as genius, it will describe the trend where it is going to make the changes on the overall market like. Then IT can be focused with a short covering behavior it has witnessed for the recent 2 sessions that may be expected to continue, but the sell on rise will be the good approach for IT stocks particularly. Then it may be the final one on the sector spend, that is auto. From the stock side, based on technical behavior and news-based one, recently it has started be giving, everyone is giving business update for the fourth quarter of Indian corporate accounting year. So that is now being pouring on like anything. Recently, based on the yesterday's one, that means a Saturday till we can take, the many banks have given their business update for the December quarter. Amongst that, we just taken a companies like HDFC Bank and IndusInd Bank with the higher numbers in the financial of December quarter given by HDFC Bank and the lower numbers against that December quarter also updated by the IndusInd Bank will be having or will be weighing on based on the announcements. Then Tata Motors passenger vehicles based on the sales data of JLR particular. Tata Steel also, Prestige Estates, GR Infra Projects, Lemon Tree Hotels are the stocks that day traders can focus, not for the safe traders, which may also suitable for the risky traders. So that's it from pre-market outlook discussion we can have. Don't forget to keep stop loss even though you are a risky trader, which will help you to have a good risk management as well as the protection against your capital. We can see the query fallen on the gold mini 1,52,000 long is there. Okay. See, if you are having a long position on gold, that also may be expected to get impacted based on the current trend in the gold. So the gold may be trading negatively with a sell on rise for the gold also can be seen until it is closing or at least breaking the point of, just a minute, current gold mini futures around 1,47,000. It should at least cross, yes, 1,49,000 it should cross. Until then, every rise may be the chance for building shorts or attracting selling. So 1,49,000 once it crosses, you can breathe somewhat if you are a long trader. As you have mentioned already, you are having C. It is better to reduce your positions on the call option side if you are having with multiple lots, means By using the bounces, you can somewhat reduce it, halve it, or at least partial portions can be reduced, because you're not seeing any things that are having in an improved manner on the gold too, because gold is attracting selling as per the recent sessions behavior. So that can be, if you want to place the stop loss for the current position, means the stop loss is very wide and huge, around 1,45,000 only. From the positional perspective only, it can also be suited. So that 1,45,000 may be placed as the stop loss from the positional aspect. Thank you for your query, sir. So we can now conclude today's session and meet again in the tomorrow's one. Until then, take care and have a successful trading day. Bye-bye.